Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a longer timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs at gregschnell.com as well as StockCharts.com. So, the big thing I want to cover off this week is everything on wheels, autos, trucks, trains, roll baby roll. And the reason I want to cover it off is because the transports look like they're about to break out to a new high, so we want to keep watching that. So we're going to cover off transportation vehicles, cars, commercial trucks, and parts. And if you got any interest in my work, you can go to gregschnell.com and check it all out. See if there's more information for you there. Subscribers get simple stuff like weekly newsletter, weekly video, and a monthly recorded conference call. And then we do 5 trade setups per day, most of them on the U.S. side, but some of them on Canadian as well. And I'm working with a partner, Dwight Galusha, on that. So anyway, hopefully there's some good info there. Go check it out if that interests you at all. So I want to start off real briefly just saying that the oil and gas sector is starting to break out to new 2-month highs here. This is the exploration and production ETF. It's probably closer to 7-week highs, but the idea being just pay attention there. I think there might be something going on. This crude oil chart won't update until the end of the day. This is actually being recorded on Monday because Wednesday I'm out of town. So so far it looks good for that. I do want to cover off a couple of other things regarding the indexes before we get into the autos, and this is the advanced decline percentage line for the S&P 1500, so large group of stocks. And what you see here is we had a big uptrend going all the way through 2020 or 2019, and then when it broke in 2020, that was pretty major. Well, on Friday, August the 7th, we actually made new highs in that index, and so far that is very bullish. And I realized that on Friday and on Monday the Nasdaq composite was selling off, but there seems to be lots of support in other areas. So anyway, I just want to point that out. And at the time, the S&P 500 is pushing up to new fresh highs. Looking in on the Nasdaq, this is updating live here. So on the 60-minute chart, and it's down about 1.3% on the Monday morning. So really putting in a big push down on the day, but we're seeing other areas start to improve. So anyway, we don't know if that'll work out, but I just wanted to mention to you that there are other areas other than tech that are starting to do well. And if you're interested, that would be one place to look. Anyway, let's get into the autos. What I want to show on the autos is, first of all, I have a group all set up, and the way you would do that is you would go to the dashboard and you would pick up a group. I've got these already done, so I'm not going to go through the whole process of doing this. But what you would do is you would just start a new scan, and you would say that you wanted to go down and you wanted to get U.S. sectors and industries, and you would go into industrials. And under industrials, I'm just looking, here's commercial vehicles and trucks, here's railroad, transportation services, trucking, any of these. And then obviously in the consumer discretionary, you would find autos. So you could just keep adding these in, so auto parts and automobiles. And the idea, again, is just to try and understand what's going on within an entire group. So you would click, in this case, automobiles, and then you would add them up to the top, and then you would say please add auto parts, and you would add them up to the top. Now what's going to happen is you can't have both, so you can either do this one at a time, and I would just take out this top line. But the idea being, you just want to get a group of stocks together, and for me, I like to look at things in industries or in themes, and so go through and gather those. Now again, you can't be in automobiles and auto parts, so the way to do that, what happened there? So the way to do that is to make sure that you change that to the word or. You'll have to add some brackets or do them one at a time and put them in a group. Anyway, okay, so here's automobiles and parts, and this is sorted in an order I had way back. I'm not sure when the last time I looked at it was, but I've got them all ranked here on a name order, and at the time Allison Transmissions was one of the strongest names out there. So what the idea would be now is each time you do this, you want to see perhaps RV vehicles are starting to outperform because people are doing staycations or staying closer to home and not traveling by airplane to other countries and whatever. So with that, how can we sort this data to get it into a way we look? So first of all, we have to get rid of the old sort. So the way we do that is we go to the edit function, and in edit, we're going to scroll down to the very bottom. And we're going to select all the charts. And again, the idea is to get rid of these numbers here. And then we go over to the far button here and it says remove numbers from. And so that's what we want to do. And it's only going to take the numbers off the list. It's not going to do anything else. So these companies will still have the rest of their names in place. But again, the idea is so that we can resort it. Now the problem is we're in edit mode, but as you can see there's nothing else. There's no price, there's no other method to sort, so we have to go back to the summary view. And in summary view, what do we want to sort here? So we could sort by price, right? We could just sort by close, and is that really going to help us? Probably not. So what we really want to look for is some different things. So we can either sort it by sector, sort it by industry, or leave sector out and just sort it by industry, and then we could do scooter rankings, right? And so the idea being if we sort it by scooter ranking and then sort it by industry, what it'll do, you'll see when we change. So we finished auto parts, so the numbers were going from big to small for scooter ranking. And then when we jump to the next sector, it's going to start at the top again. And so we can keep working our way through the chart list this way, and that would be a good way to kind of get the themes of what's going on within the group. Hopefully that makes sense to you. But the idea, again, what I'm trying to figure out is what's working within certain industries, and you want to invest in the leaders, the ones that are starting to break out. So as transports start to break out to new highs, if they can get through to new highs, we probably want to know which one is in it. And these ones that are really small here in the pennies, that's not really my style of investing. So I want to look at some bigger names. But again, if this sort order works for us, then what we'll do is at the bottom here, we're going to say number in sorted order. And by doing that, now it's going to put this 1, 2, 3 in front. And again, we've sorted by auto parts, and then we've sorted by the strongest stocks within the auto parts group. Now, if you like the chart shape, so in this case, I'm using my 5-year weekly chart, and that just gives us a really big picture on what's going on. So I think that's particularly helpful to always look at the big view. What I don't want to do is be looking really short term and finding out that I'm buying something going up in a downtrend or hasn't really started to turn yet. I kind of want to wait for bases to be built and start to build out of that. Like here, it went sideways for 4 months and then started to grind higher. This was a move from $1 to $3. A pretty jagged move, but for the most part, it soared up, settled back, soared up, settled back. That's okay. What we don't want to be doing is investing in this long downtrend where the stock's just never working for us. So again, this might not be the right stock to lead with. We can look at it and say, well, it's already gone from 1 to 15. Do we really want to get in there now? And I would agree that's probably a hard place to invest. You can see that the PPO is rolling over from a very high level. So if nothing else, give it a chance to pause, and when it starts to turn back up, maybe that's a better time to buy. I can't just look at one stock. I want to look at a group of stocks and see what the big trend is in the group. So I like to go to the view all mode. And in view all, what we see here is the ability to scroll. And I want to point out one thing. So if we have the auto size charts turned on, when we go into an action, we can't annotate. So what we need to do is leave that auto size of charts turned off. And that way, when we go in, when we go back into the annotation tool, then it'll work for us. So I just want to make that distinction. So that's one of the reasons that you would leave this button turned off. Anyway, I've got these filling my page, so they work pretty good. Anyway, in this particular case, this stock looks like it's run too far for me to jump on now after it's had a 15-fold move off the March lows. Here's XPEL Technologies. This one's just breaking out to fresh new highs. I like that look. It just got a scooter ranking recently, so that's more bullish. And what we see is the stock was a 50-cent stock back in 2016. It's a $22 stock now, and it's just breaking out to new fresh one-year highs. That looks pretty good to me. A nice chart shape. So again, how would I have found that otherwise? Pretty difficult if it wasn't on your name. And so the scooter ranking helps bring those names to the front for me. We can see that the relative to the S&P 500, we're trending higher, and that's what we'd like. So I like to keep track of that big picture, and when that big picture changes, I probably want to change my investment approach on the stock as well. One thing I do like to watch for, and I'll just point it out on this first one rather than on each one, so I want to go into the actions mode and annotate. I like when these big long downtrends in momentum reverse. So we don't know if that's going to happen, but if this was to bump up against here and then fail, that would be a concern for me. Again, you can get short-term rallies. The big question for me when I try to invest, I want to find the long-term rallies. So this is the save button over here, and then you hit the X to close, and that'll keep the line on the chart. So here's Borg Warner, obviously a nice ballistic move here, a double off the lows, just breaking out to new 6-month highs. That's still nice, and the chart is just getting up to the scooter ranking of 75. So a good strong push. And again, the name was declining for 2018, sideways for 19, then fell apart in 20. It would be obviously nice to see it get back through this 45 and start making 2-year highs. That would be big and bullish. Dorman Products. What we see on this one is the chart had the sudden surge. Lots of things had a sudden surge on June the 8th and then rolled over immediately after. So we just broke out to new 1-year highs on this particular chart. So I think that's obviously pretty bullish. Excuse me, I'm just going to... Okay, let's see if that works a little better. Okay, so here's Motor Car Parts of America. And we're sitting right at 6-month highs, trying to break through. Again, this is being recorded Monday morning, a little after the market opens. But we're starting to see this group break out. PPO going above zero. I just like that whole chart shape. Everything's good. It's above its moving averages. Pushing up slightly. And again, we're not... so because these aren't Nasdaq tech stocks, they could start their whole wave up after, as we seem to get the economy rolling again, and it's in sputter and stop mode. But again, as it goes forward, we kind of want to be aware of the changing trends, and obviously everybody jumped on the tech bandwagon early. I still think there's some other sectors here that I'd probably like more than trying to buy some of the big names at the multiples they're at. So here's Modine Manufacturing. Not really a chart shape I'm happy with, downtrending for 2.5 years. I'd probably want to avoid that. Tenneco, same thing, downtrending, but starting to make a base here. Down to $2 up to 10. Those are pretty big reversals. Magna is a Canadian car parts company, and breaking out here above its 10-week and 40-week, pushing up nicely. This is at new 6-month highs this morning, and starting to push up really, really well. Stratex Security Corp, that chart doesn't have any magic for me. This huge bar in here is interesting, but consolidating sideways, perhaps it's a nice place to get on board. But in general, the trend's been down for 5 years, not really one I want to play. Standard Motor Products breaking out to new 6-month highs. Interesting, but again, I'm not that happy with the trend on these names. So here's Visteon. And what we see for this stock, it was in a nice uptrend there from 64 to 140, so really big move. And then in 2018, you might remember the fall of 2018 was particularly weak for overall market, but this stock had started to plummet 3 months before that. It hasn't spent a lot of time above its 40-week moving average. If anything, I'd like it here as it starts to break out. Looks to me like it's ready to break this downtrend, and I can just draw that on there. So again, trying to get through this downtrend, and if it can't get through that, that's a problem, but at least you got your risk reward very, very close, and I wouldn't let it get too weak. The scooter, or the PPO, the momentum indicator, I like it when it goes positive, so it's just doing that now. So if it can hold this breakout and start to move to the upside, perhaps there's something there in the name. Again, it was up at $140 before. It's sitting at around 80. And to get back through last year's closing highs would basically call it $100. So another $20 move or 25% from here. And let's just close that down properly. Okay. So Gentherm, the stock hasn't done much for years. It goes on some brief 3-month rallies, but nothing really interesting. LKQ. So when I look through these charts, I'm not finding anything that makes me really want to jump out and start to buy in here. That Magna chart was perhaps one of the more interesting ones. Looking here, I wouldn't mind it if it could start to break out, but it's still got a little bit of work to do to get through that. Genuine Parts, and again, back here, it wasn't doing much to begin with, so maybe it's just getting back to where it was. APTV, same thing, not really interested. Big downtrend here, so kind of looking through saying no. Here's Lear Corporation, and again, big auto parts supplier sitting around 110, just breaking the 10-week is going above the 40-week. That's pretty bullish. Like to see that. The stock looks like it's starting to lose momentum as it's getting to zero here, so it really needs to start to thrust up if I want to get interested in the name. I am starting to see things improve in the industrials, so as a group, that's one of the reasons that I'm covering off this transportation area, because it's been starting to improve. So here's auto parts again. Getting through 2250 would be a pretty big deal for this particular stock, and we see that same sort of trend on the PPO that I like to watch for a breakout on. That is starting to, that's right there right now. So if we could kind of break the 2-year downtrend, that would help. Again, maybe this stock just recovers from 22 to 33, but that's a 50% gainer from here. Wouldn't mind seeing that. And again, if the whole industrial sector starts to rise up here, that would be helpful. Gentech, this one's been pausing for the last 3 or 4 months. Momentum is right at that zero level. Looks like a long way to get up to that trend line. I'd probably just be careful here, because this one doesn't look like it has a lot more mojo left. It's just been stalling. Now maybe once the industrials start to move, it could turn up. But a breakthrough 28 would put you at new 6-month highs. But again, your room up to the prior resistance level is 31, so you maybe get 10% out of it. Auto Live. Again, these charts are broken, so nothing really interesting here. Rather than keep going through a bunch of weak charts, the scooter ranking's down under 50 on the rest of these. We can scroll quite quickly. Nothing that we really want to look at. Sometimes I like to look at the ones that have a scooter ranking of 30 and are starting to turn back up. This one's been weak for 2 years. Pretty desperate looking chart. Perhaps it can get going. It used to be 150. It's now 15. That's quite a haircut, 90% off. So maybe there's some room in the name again, but I don't really like the recent trend. And the thought, just let me help before I go too far. So this stock used to be very strong. Then you see the scooter ranking where it just kind of performed in the middle of the range for a while. So let's think about that. So we have 100 companies, and we have 25 in the bottom, 50 in the middle, and 25 at the top. That if we just talked about the 4 different regions of the scooter ranking. When you're in the top 25%, your price is outperforming 75% of the stocks, and the price action is very strong. When you're in the middle here, you're basically just following the industry and you're not doing much. When you're in the basement, that's particularly poor, and you're underperforming your peers, in this case the small cap peer group, and they haven't done anything for 2 years. So in a major business like this, or a long-term business like this, perhaps they're very weak and they aren't going to get fixed. In something like oil and gas, what you'll see is it'll rise up into the top, it'll fall to the bottom, it'll rise up to the top, it'll fall to the bottom. And so the scooter ranking can help you see those changes in momentum. And perhaps there's a reason to expect improvement. Now, I don't know anything about Cooper Standard. I think of them as, if I'm not mistaken, they sell electrical boxes and stuff like that as well. But anyway, the point I want to make on this name is if you were to buy in here, let's just say you take not so much the peak up here at 20, but a breakthrough 1414. So we're at 1486 here. You're getting through to new highs. You're coming up against the 200-day moving average or the 40-week moving average. If this stock is going to break out and even get back into the middle of the range, that could be a double. But the big thing that I worry about is it's really underperformed for 2 years, and typically, just based on the scooter ranking, it's not cyclical. So it stays up at the top, then it got weak and went into the middle, and now it got weak and went to the bottom. So unless they have something great that's starting to change, I'd really be a little bit worried about trying to pick up this name for a winner. So hopefully I've explained kind of how I like to think about the scooter ranking. Okay, so let's get out of these very weak charts, and we'll just, well, actually, let's go this way. We're going to go down to the bottom. I'm not seeing anything I like here. And then let's just see if we can move over and find some stronger scooter rankings. So here we are with Toyota, and we've moved into the automobile, so we'll go back one sector. Okay, still weak stocks. So maybe I should just explain what I just did there. Okay, so at the beginning I explained that we had kind of three different areas of the market. We were going to look at auto parts and automobiles and commercial and industrial vehicles. So what I did was I jumped forward and I could see Toyota Motor, which is obviously a large cap auto, and then I thought, well, I want to catch the best one in the group, so I have to go back to the previous group of 10 and just scroll down to get through the weak stuff. So here we go. Here's Tesla. It's a chart I think we're probably all familiar with, and it is holding up right around the $1,400 level, down 3% on the Monday. But again, the chart is very strong. For me on Tesla, and you can be different, I'm fine with that. I do not want to see this uptrend break in momentum, and I know at some point it will. But typically when Tesla breaks these uptrends, it's not necessarily that the stock's going to fall a lot. It just might be done making more money for a while. And this one's had quite a run. I would say this, if you're a long-term believer in the name and all that kind of stuff, and you want to hold whatever through a dip back to the 40-week, cool. Everybody's got a level that they like. I'm just saying if you really appreciate the gains you've got and you'd rather just move on and find something else and come back into Tesla at a later date rather than holding through huge swings in your portfolio, I would either use this trend line of relative strength and my PPO. If both of those start to break, that would be a concern. Now, Tesla's had a parabolic move here. So I would change from this line and go into the parabolic tool and just go bing, 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 and just start to form a trend line here. And again, let's not make it right at this end, right? Let's make it a little bit more normalized. But if Tesla starts to break down through here and is going to take a year off like it did back in here, where it just ground sideways for a long time, do you really need the aggravation? Take the profits and wait for Tesla to set up in another base again. Up to you how you play it. Some people just want to hold it and are happy to have the name for birthday parties to talk about it. Anyway, this stock, BYD, if I'm not mistaken, this is the Chinese auto manufacturer, and broke out to new highs recently and then has consolidated right near those highs. So same thing here. I want to watch and make sure it's got some power. Hasn't been a lot of volume showing up as buying interest here, so it's probably got some room to come back, either the 10-week or the 40-week. Here's Geely Holdings. Actually, this is the one I was thinking of, Geely. This horizontal breakout here through $2, this looks very nice. I like the fact that the stock is starting to make a higher PPO. And just let's go up to Tesla one more time. Tesla, here we go. So what you start to see is as you're making breaking out of your base, the stocks or the momentum indicator starts to make higher lows, and what you want to see is it get into positive territory and then continue to make those higher lows while in positive territory. So let's go down and look at this stock while it's still in its base. and it's just starting to make a higher PPO level. So hopefully I've shown you how that compares back with Tesla and why it might make it more interesting. Okay, so here's Daimler. I think we all know him as Mercedes. Anyway, still in a downtrend, trying to push above the 40-week here. It wouldn't take much to get up over 56. But again, this car company hasn't done much for 2 years. So a little bit surprising with the strong US dollar making the euro weaker. You thought it would have helped Mercedes. Hasn't done that. Ferrari up near the top. I mean, when you're in the top right-hand corner, that's pretty bullish. And then here's Fiat Chrysler breaking above its 40-week moving average. Chart's okay, but again, the scooter ranking's been poor to average for a long period of time. Ford, I think we know they changed CEOs last week. Anytime they change CEOs, I usually like to look at the stock. I've got some other chart lists that I use regularly, and I note on there, Bill Hackett came in or whatever and changed. A lot of times a CEO change can rocket the stock, so I wouldn't give up on Ford here at $7. And then Toyota Motor, they had a big down move 2 weeks ago. That was crazy. And now all of a sudden, rocket right back up. So a big reversal, but stuck here right at the 40-week moving average. I like when the full stochastic bounces off 50. That's just a good clue that there's some support there. But this was a rapid move. This was $5 down and $10 up. So pretty crazy times. A kiss and go on the PPO is typically a nice signature. I'm just looking to see if there's some other examples, probably right in here. Worked at it for a while. Here's a touch and go, another touch and go. So those can be bullish signals of just pulling back. And here's BMW. And we can just see stuck right around the 40-week moving average. Again, nothing great. The stock hasn't been doing much for a long period of time. Scooter ranking says it never gets into the top performer. So might be a top performer out in the world of the driving experience, but maybe not so much in terms of the stock. Honda Motor Company, we see the scooter ranking just kind of stuck in average. General Motors has been in the lower half of average here for the last year. And can it start to turn up? It is making new 2-month highs to start the week. Harley Davidson, that looks like a downtrend to me, and so I'd probably avoid it. Fuji Heavy Industries, this one's really a weak chart for 5 years. Nissan Motors, this one's been crazy, just drop, and no real bounce even after the whole COVID situation started. Delphi Automotives here, we're trying to get through this $15 level. That looks pretty good to me, and the PPO is breaking out to higher highs. Again, this IPO'd as a separate company a couple of years ago. Anytime something's making new 52-week highs, I want to watch it. And look at the volume down here. The positive weeks are far outperforming the negative weeks, so that looks a lot better to me. Here's NIO, the electric car company, taken off. Again, another look at Tesla. This is a nice name, Elio Motors. That doesn't look like a chart we want to look at. Anyway, into the big manufacturing, here we go with Cummins. That chart's breaking out to new high. PACCAR breaking out to new highs. I'm running out of time, so I'll quickly speed through here. But Freight Car America, under the 40-week for a long period of time, starting to break out. Scooter ranking moving back up to 75, so perhaps that's something we could capture. Deere is at new 52-week highs, and I think you can just see, but as soon as we see the tone change on these charts, it makes it a lot easier to look for winners. So with that, thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recordings on the StockChartsTV YouTube page and find any of my blogs on StockCharts or GregSchnell.com. Thanks, everybody. Have a good week. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.